Holy moly guacamole. Everybody is bullish. Take a look at this chart right here. Boom, a big uptick. This is what asset managers are doing with their money. The last time it was this high, by the way, I went back throughout history. These are the highest level readings that I have access to. And the last time it was up this high was right before the 2018 pullback. This is letting us know where asset managers are doing when it gets above 100. That means they're not only fully maxed out long, but they're also using leveraged long positions. Let's mix that in with where the monthly CPCE is. This is the put to call ratio. The month's not over yet. The week is, and we'll get into those charts in a second. But dang, smashed down to 0.40 as the market continues to move more vertical. My name is Michael Silva. You're watching the Daily Stock Market Brief. And in today's video, we're going to be going over the indices on multiple time frames, the weekly and the daily. And then we're going to be getting into some stock market indicators, commodities, the dollar, and then wrapping it up with the conclusion. I got an interesting chart to show you. Okay, it's going to be in the Nasdaq 100 section. I already posted on Twitter. Okay, so the Twitter followers get a sneak peek beforehand. Everything's timestamped in the description below, so let's go ahead and get into today's show. All right, welcome back. We're going to start off with the indices, more specifically the S&P 500. Let's look at it on a weekly time frame. Check it out. We closed at another weekly all-time high. Whoa, crazy. Up 73.22. That's 1.94%, almost 2% for the week. And guess what? What's important to call out is we talked about this hanging man candle, and now we're starting to see it get above that hanging man candle. So there was no confirmation to the downside for that bearish type candle. Now, that doesn't mean things can't change, but just know that price action has closed above that weekly candle. And we kind of broke through this broadening wedge pattern. So that is a bullish sign, more continuation to the upside, potentially, right? The next target that I'm kind of keeping an eye on is 4,000. But we might, have a little bit of a bumpy ride as we saw today. On the daily time frame, we broke through this ascending triangle. We still have this trend line right here kind of holding strong. But these small couple of days here have been kind of interesting to say the least, right? So we moved strongly up with some bullish momentum, and then we're getting these very tight range candles, okay? So what is a tight range candle? Well, you can just see the size of the candle from high to low or low to high. It's just a very small looking at the relative other candles previously. So that tells me that momentum is slowing down a little bit on the daily time frame. Now today we had a big gap down and we tagged this horizontal line. And that happens to be where the 5 EMA is too. And then we bounced from that level. All right. So this is still an area of support, this 38.25. And then we have the 20 period and this trend line. So still a lot of support around this area. Let's go to the Russell 2000. Russell 2000 on the weekly time frame is completely vertical. And what's very interesting is the MFI continues to defy gravity. It is just jammed up to the max right there. And it doesn't typically stay there for long. Typically, it comes up here, spikes, and then moves down. So this is, I just never seen anything like that before, which is interesting. And then the RSI also very overbought as well. It's going to basically have to either correct or consolidate here. It can't continue a crazy run up like this for much longer. It can, but it would just be really unrealistic. So what could happen? Well, we can see a very aggressive move to the downside if it does not choose to consolidate. And really what you would look for is around a 50% retracement. And what that would look like is probably right around 190 would be a very just a very fast hit to the downside. If it comes all the way down to 170, that would be a very good buying opportunity, good risk versus reward because you had perfect resistance, and then it really broke out. But I've seen the history of these charts, and on these big breakouts like this, they actually haven't back tested. So I don't have that chart in front of me, but they haven't back tested, but they do get pretty significant pullbacks. And that would be likely in these overbought, overextended territories. So if you're looking to go long right now in the small caps or the IWM, me personally, I wouldn't touch that with a 10-foot pull. I would be shorting, using it as a short hedge on my other long positions when we get gap ups. All right, now let's get into the IWM on the daily time frame. Huge gap down today, and then we just recovered and basically closed above the 5 EMA and right on where we opened the previous day. Bearish crossover looks like it's going to be happening on the price percent oscillator. This right here is not the worst type candle formation. Okay, we've been going up, we saw some weakness, and then all of a sudden moved right up higher. So, bullish engulfing on these two candles, which might not represent too much, but keep an eye out. I'll be posting on Twitter on my a link to my market dashboard for my website. I'm going to be throwing up the 30-minute charts to hone in on some more key levels when the week opens up next trading week. Now let's get to the Dow Jones. Dow Jones has an interesting type candle. We had this long hammer candle right here that we talked about, and then the next week didn't get the confirmation above it, and this week again we didn't get the confirmation above it. So we are struggling to break and close above that hammer candle. So it could still potentially, if we don't get a close above that hammer candle, it could be a topping type candle formation. Now this last candle that formed is an inverted hammer candle, which needs confirmation as well, but that's not the greatest sign. Dow Jones seems to be slowing down a little bit here. You saw a huge range candle here, and then we're seeing some lower range, just very, choppy type price action. And the choppy price action could be seen on the daily time frame. You can see here we have, very similar to the S&P 500, we have that trend line kind of just drifting up. We have a bearish crossover on the price percent oscillator, but then you can see this week it was just kind of basically just a couple weeks of trading. Let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah. 11 trading days. So a couple weeks there of trading days. And it's just been kind of ping-ponging around within this channel. So we got to just see if it's going to break down to the downside or it's going to break to the upside. The 20 period moving average is on the bottom right here. And the 20 period you can see is held as support. So, bullish momentum, bullish trend. I would think that the 20 period can hold. If the 20 period can't hold, maybe we get a spike down to this lower trend, and then we'll reconsider or reconvene to see, what happens after that point. But right now, I just see it as still a lot of strength. Nasdaq 100. This is the chart that I wanted to kind of get into. People say this time is different. I just want to show this. This is not like, anything crazy, but what I want to show is the psychology of how markets respond and act. And I'm just dating back to 2017, basically. All right. So, and by market psychology, I mean price action. So people buy and then, they sell, and they buy and they sell. And we're looking at the weekly time frame. But what's crazy here is let's focus on the pink lines. Okay. The pink lines, you get this long run up, and then you get these choppy, fall up, fall kind of periods. Okay. And you can see that here, repeating itself. So we got this big long leg up, sharp pullback, right back up again, pull back again, but it was a higher low, and then we finally broke out. And the same thing here, large leg, then down, up, down, and then we broke out to the upside. The blue line is representing the breakouts, okay? So we have literally right here we had it happen. So this has happened 3 different times. And then after that point, these blue are the trend lines, like I said, we have these little orange lines here. And this one might not be where the orange line actually is, but I wanted to just kind of give you an idea. And I'll start that here. So basically in these little arrows, we broke above this kind of area of resistance, and it showed a lot of strength with a big weekly green candle. Okay. But then the following week, we got this big red candle and then a little bit of chop. And then when we broke down through the trend line, we saw some pretty bearish type price action occur. Okay, same thing here. We broke above resistance. We created now a new line to support this new trend line. And then when we got above this kind of horizontal line of resistance, we had a nice big green candle to the upside, and it was followed through with a shooting star type candle, and then boom to the downside. And what we're seeing here, while I wanted to point out this hammer candle is a topping type candle, okay, but we didn't get confirmation, but we got today, or this week, sorry, we're up 5%, almost 5% in the Nasdaq 100 in a single week. That's not normal by any means. I mean, that's pretty crazy. I mean, maybe it's the new normal, right? But it's a solid big green candle like we saw here and like we saw here. So it's going to be interesting to see how this plays out. Going into next week, what if we get a big red candle? Maybe that would be some dark cloud coverage is what they call it. And that could be a very bearish type pattern. So it's something to just understand and be aware of. It doesn't mean that the market's going to just roll over and crash like it did right here or like it did right here. But it is something very interesting because people say, you know, this time is different, this time is different. But the reality of the situation is market psychology and price action. And when we even break down to more individual stocks, you know, they might not do the same thing, but they rhyme. And this is, you know, a rhythm right here that I noticed. On the daily time frame here, you can see this up channel taking place, and we broke out of that, and now we have some really small range candles slowing down a little bit. This could be consolidation, or could be momentum to the upside is slowing down, and we could be rolling over. I don't know yet. We had a bullish crossover right there, and if that continues to kind of spread and point upwards, that's a good sign. So we got to monitor that. Overall, this lower trend line has been holding solid. The 20 period moving average, which is in the middle of the Bollinger Bands, has been holding solid. And then the 5 EMA has been one of the obviously more frequently tagged EMAs. And that has also been acting as a very strong level of support for the Nasdaq and the other indices as well. Now let's just look at the NYSE, but I'm only going to show the daily time frame on this one, mainly because I forgot to bring up the weekly. Oops. MACD, bearish crossover, still within this little channel right here. 20 period moving average is sloping to the bottom portion of the channel. Are we going to break down through the 20 period? Maybe. I mean, we haven't really actually seen a daily close significantly below it for quite some time. Basically since, it was around November. Yeah, so it's been some time. And that was kind of just right when the presidential elections were going on. So if we continue to slope this down, it's going to be hard for the momentum to continue to the upside. We closed below the 5 EMA, but like I said, we're still above the 20 period moving average. Bullish context, okay, but there's a couple red flags here on the NYSE composite index, which is the broad market index. So, you know, pay attention to that. Now let's get into some indicators, okay? Indicators. The week closed, so I'm going to show you the lumber to gold ratio. Lumber skyrocketed again, and gold didn't really move too much. So we're seeing a big rise right here in the rate of change for the lumber to gold ratio, which signals that we're still risk on in this environment, meaning that, you know, and you can tell by just asset managers what they're doing, the euphoria out in the markets taking place right now. All signals are a go. According to this one, right, that, you know, everything is just extremely, extremely bullish. So we're going to continue to monitor this. And like I said, we're going to be getting into commodities here, and I'm going to show you some weekly timeframes for gold, because if they do break out of some of these key levels, it could really send gold to be one of the more higher performers like we saw earlier on a previous breakout. Here's the XLU over utilities. This is another kind of risk on, risk off type signal. And we are back to risk on. If it goes above zero the following week, you would have to go risk off, or consider just being very careful out in that environment. And even if these signals, by the way, even if both these lumber to gold and then this one, even if they are risk on, meaning that, it's more beneficial to continue to be in, you know, equities, or for example, this one would be more in the SPY versus the utilities. That doesn't mean that you can't have a flip take place very soon. So keep that also in mind. All right, here is the NYMO. Honestly, nothing going on here. Still very weak breath. Negative 8.5. Still have the negative divergence. I'm waiting to see some sort of bigger burst of breath take place, either, you know, to the downside or to the upside. But as I see it, it's the same script that we saw here from December to February. It's playing out again right over here. Maybe that's going to change. Maybe it's not. You can see on the S&P 500 this relentless drift higher, and you saw it right here, relentless drift higher as well. So, you know, that's something that I've been just kind of tracking and monitoring. The VIX, the volatility index, the fear index. This is the interesting. Very interesting to me. And this is why also I got to be on my toes, and I got to be very aware and not just look maybe at one signal or two signals, but, you know, we see weak breath, but we see these markets continue to make weekly highs, all right, all-time highs. And we're making all-time highs with the VIX relatively high versus other times that the market hit all-time highs. So we're still trading around, we close at 21.91. why aren't we lower by now? It doesn't make too much sense why the market continues to rally and hit all these highs, but yet we're still holding VIX levels that don't really suggest that. So my idea behind this is, if we don't start continuing to move lower, this is still giving us the very, likely outcome of seeing a very aggressive vol spike here in the very near future. So also monitor this, right? So we closed basically on this little trend line here. My little target area, which I was keeping an eye on, is this little pink box down here at 20 to 21, that kind of range there. If it gets down into that zone, I'd be looking to sell some of my assets. Just because, it works inversely. If it goes down, that means things go up higher. And then if it comes into this area of support, the VIX, it might start moving up again. And if it starts moving up again, that might mean the assets that I'm long could very well sell off. So something to keep a close eye on. Let's go into the sell signal indicator. Continues to head a little bit lower and lower. That is telling me that there's just a lot of bullish euphoria out there. Everyone's long. The CPC is made up of the CPCE and the CPCI. The CPCI is looking at the indexes, options on the indexes, and then the CPCE, which is more retail traders. That's the equity side of things. And the CPC is total combined. And when we're at these low levels, or when it's pointing lower, the lower it goes, the more bullish we really are. So we got to watch to see if it crosses back above 8. That is the the sell signal that I like to track. I like to keep an eye on. This chart was very interesting to me. So this is one of the BP charts. This is the BP NDX, bullish percent index. And what I want to point out here is the higher lows taking place on the daily time frame for this chart. But then the RSI is putting in, obviously, lower highs and lower lows. So there's clear divergence taking place on this chart. Now, the RSI is at 49.46, so this still gives us, hey, okay, that just means that this can potentially head higher and push the Nasdaq higher as well. But as I already showed you in that Nasdaq chart, this one specifically, I just found it to be very interesting that we're seeing it break, big green bullish candle, but we're seeing, a pullback in the BP NDX as well as in the RSI of this, that it's also heading lower. So I just, I had to call that out for anybody that finds that kind of stuff interesting and helpful. Me personally, that's another index that I wouldn't be going long on unless if we get pullbacks into major areas of support. Because no, things don't just always go straight up, like they just don't go straight down. Things bounce, and some of the biggest bounces are in bear markets. And just like some of the biggest falls are in bull markets, right? Bull markets, they climb a wall of worry. And when they climb a wall of worry, the bull tries to kick you off, right? It tries to buck you off. That's, where the kind of sayings come from. Now let's get to the commodities, right? And we're going to look at gold on the weekly time frame. And this was us kind of showing you if we start breaking out to the upside, it could put pressure on the lumber to gold ratio. It can head down lower, suggesting a risk off move. Now, it hasn't got to that level yet, but what I would like to point out is this week touched down on the 50 period moving average perfectly, and we started bouncing up higher. This is a hammer candle. Maybe we get continuation of this candle and then break out of this flag type pattern. Okay, this is a flag, and we are in bullish context on the weekly time frame. Yes, short term, yeah, we got ahead of ourselves, right? Very overextended from the 50, but now we're taking that breath and reconnecting. Can it head lower? Yeah, it can head lower, but just watch these key levels. I put the fib levels up here, and from basically here to the high right there, and we bounced perfectly from the 50 period. Okay, so like I said, you can get 50% retracements in vertical movements. So we moved basically vertical, we had a 50% retracement. All right, now we're seeing it bounce and kind of trying to get itself back up. We closed above the 38.2 level, which is another key level to keep an eye on, and the 61.8 is also a key level. So if we start breaking down further, keep an eye out on this level, 1690 and 46 cents if you want to make it exact. But me personally, I wouldn't wait for it to tap 1690, but if it got to like 1700, I'd probably be buying, or 1705, I'd probably be buying. So keep that also in mind. Silver on the weekly time frame, descending triangle, bullish context though. We have not reconnected with the 50 period on the weekly time frame, and we have not reconnected with the 200. So this really got ahead of itself too. We're putting in lower highs. Maybe we head lower and reconnect down to this 23, 22 range, or you never know. Maybe we do break out of this level and start heading higher. Maybe just more demand right now is for silver, so a lot more people are going into silver. So you're seeing gold not do that great and silver not do as bad as gold. You know, it could be. I'm going to be watching the price percent oscillator. I want a bullish crossover on the weekly time frame to really give me confidence that we can see silver head higher. Now, let's talk about Bitcoin. I've been posting about this symmetrical triangle. I said if we break down to the downside, look for the target at the 50 period moving average. Perfect. You know, maybe missed it by just a millimeter. But, you know, if you saw this coming down, you'd probably be like, oh no, it's falling apart. But we had bullish context, right? The river was pointing up. I said this one was pointing up too as well. The only kind of nasty thing is this MACD is just super bearish looking, but it was still above zero. So now we bounced from that level, okay? That's a big move in a short period of time, boom. But what I want to call out here is it could be just a back test of this. So we don't know yet if we're going to get confirmation or follow through of this hammer candle bounce. Okay, so we're still putting in lower highs. And we recently broke down from this symmetrical triangle. So bearish breakdown. Yes, we're bouncing from this key level. And now we're trying to recoup and come back up. But keep in mind, you want to now watch this trend, this blue trend line right here. So we need to get ourselves back above that to see Bitcoin continue to head higher. The last thing I want to call out is light crude oil on the weekly time frame. We're running into the 200 period moving average, small range candles. It's struggling to close above it. We start getting above that, there's no reason why oil can't shoot higher and faster. I've looked at the monthly time frame. The monthly time frame looks pretty darn bullish at some key levels. We did recently break above this area of resistance, so that should be a green right around 50, and that should, by green I mean an area of support. The MACD also looks pretty bullish right here as well. But the only kind of cause for concern is we had the 50 period sloping down and the 200 flat. So it's not like it's in some great bullish context here. It's still swimming up a river. And when you swim up a river, you do things a little bit slower than usual, right? Yep, makes sense. Dollar. The dollar on the weekly time frame. I'm not going to even show you the daily because the dollar hasn't done much. But, you know, the question you got to ask yourself is the bounce over in the dollar? Was that all we got? Maybe, maybe not. We still have a positive divergence in the RSI. I wanted to bring up the S&P 500 chart and just show you just how similar it is. I talked about this in a previous brief. The correlation down here, you can see it's pretty much an exact, -1, which means it almost mirrors each other, the opposite of each other. So when the dollar goes down, you see S&P 500 go up. When the dollar goes up, you see the S&P 500 go down. So you have two structurally sound patterns right here. You have the S&P 500 in a rising wedge, which is bearish, and then you have the dollar in a falling wedge, which is bullish. All right, so something's going to give here, and we don't know what it's going to be. Is the S&P 500 going to break down through this trend line, or is the dollar going to continue to break down? It's too hard to say right now, to be quite honest. Honestly, it just seems like all the policies out there, if you want to pay attention to all that and try to, come up with your own idea, the market's going to do what the market wants to do with all this information. So I like to keep it to the technicals and then just look at main key levels. But, the bounce failed so far, right? We moved up a little bit and we followed through on this weekly candle, pretty much wiping out last week's gains on that bounce. So now we need to either, one, see more strength in the dollar continue, or it's going to continue to break down. And if it continues to break down, I'm going to be making a video here. Actually, it should be out on the 25th or 26th. It was another sponsored video, so I'm pretty happy about that. So I can get some support for this channel. Because it does take a lot of time to make these videos. So that's going to be nice. I'm trying to put it all together here, but it's going to be a lot of correlations with commodities and the dollar. The last one I did was around the 10-year yield, so that should be fun. And I'm kind of losing track here, but really what I want to keep an eye on is if the dollar breaks out to the upside, that can put pressure on the big run-up recently in commodities and various assets like that. And if it drops down continuing, it'd be likely to see those assets go really, continue to move up higher, and potentially even the S&P 500. So we're going to have to continue to watch this correlation and see if it just holds at this -1, -7.5 range, which means they're just doing exactly the opposite of one another. All right, so let's just wrap this up. The week just came to an end, right? And honestly, it couldn't be more bullish across the board. What I want to remind everybody is the number one, to be successful in this game for the long term, you need to always focus on risk. Okay, it's not something that you can just be like, forget about, right? It's what makes people stay in this game for a very long time, managing your risk and understanding what could potentially take place. Because if you understand, hey, this could happen, but I don't believe it will happen, at least that if you believe that there's a possibility, you have to prepare and you have to create a plan around it. And just so you know, that doesn't mean that you can't create a plan for if it continues to go up, the markets, right? So you need to plan for both. Think of a coin, right? A coin has three sides. This I hear from Robert Kiyosaki, and I use this all the time too as well because it just makes a lot of sense. Coin has three sides: heads, tails, and the edge. So when you're coming and approaching your portfolio and you're investing, and by the way, this isn't a recommendation, this is just kind of what I do. You need to look from a bullish perspective and a bearish perspective. You need to know what great things can happen and what horrible things can happen. And you need to have a plan for both. But what this looks like to me, okay, what this looks like to me is everyone has a one-sided plan. And when you have a one-sided plan, that means you're fully exposed to the other side of the coin, right? So if all you're focusing on all the good things that can happen in the market and you're constantly building up this euphoric behavior, well, what happens if something bad happens, right? Or takes place in the markets, or we get a correction, or all of a sudden this, the ground gets shaky and you don't have a plan. Well, people typically are like, no, it's going to bounce back. Oh, no, it's going to bounce back. It'll bounce back. It'll bounce back. And then it doesn't bounce back, and then it continues to head lower. But then because they don't have a plan, they get so scared and then they sell it very specifically at the exact time that they shouldn't be scared and selling, but that they should be buying. You get it? You got it? You do. You don't? You do. Come on. All right, everybody. I hope everyone has an excellent weekend. I will see you back on Monday. Oh, actually, I might put out a weekly scan. I'm gonna look out I'm gonna look to see what's out there. All right. See you later.